Hi, Lise.
Hi, honey. How you doing? Well,
I'm good.
first, I just wanted to thank you for doing this with me today.
Oh, my pleasure.
I have been getting a lot of phone calls, and I've been reaching out to a lot of people. And I consider myself a real estate consultant, and I try hard to keep up with what's going on. But as you know, this is a little bit different. And sometimes when they ask me questions, I'm kind of doubting myself just a little bit now about how to answer them. So I'm going to share with you some things that I have been through, and I told people that I will get back to them. Because I think I know the answers, Lynn. I'm pretty sure I do, but I don't know if there's any extra programs out there. I don't know if there's any help, any changes that I don't know about. And so sometimes I have to tell people, you know what, let me just get back to you on that. So here's a couple that I'm going to ask. Okay, I was talking to a for sale by owner.
Okay.
Had his house on the market for about a month. Just lost his job. His question to me was, well, I think I can still sell my house, take the cash out, and maybe put half down. Do you think I can still get a mortgage if I don't have a job?
So the answer to that is the government has regulations in place that underneath the qualified mortgage. I've been using the term qualified mortgage a lot lately because the government has these rules in place that protect us against not getting a mortgage that you can't afford, right? And there's something called ability to repay, which is Deb Tom's coming in.
Yep.
There's an ability to repay, which is basically means you have to prove, hi Deb. You have to prove that you have the ability to pay back whatever money you borrow. So when you don't have employment under the qualified mortgage, we can't give you a definition of, how to repay, or we can't give you, we can't prove how you'll repay the money. So if you don't have income, you may have money now, let's say in your savings to pay it. But if we don't have the ability to continue to repay, we don't have the ability to lend money under the government's regulation of a qualified mortgage. And in today's environment, the reason why I say qualified mortgage and I bring it up so specifically is because in today's environment, the qualified mortgages under that definition are the ones that are being backed by the Federal Reserve. Those are the ones that the money's available for. Where when you go outside the arena of a qualified mortgage, there's the liquidity in the secondary mortgage market, the back end of the mortgage market. The money is not as liquid there because the Federal Reserve is not backing it up. In any mortgage, you need to prove your ability to repay. There aren't any creative financing options that I'm aware of at this moment, because we have to be able to back these mortgages up with funds, and the funds that are available that are in today's, in the release of the press today is unlimited funds. This is what we're hearing, unlimited funds. The Fed's saying we're going to give unlimited funds to sustain the mortgages, the mortgage industry, but that only falls under the mortgages that they are backing, and those are the qualified mortgages. So is there private money out there? There could be. It's not to say it's impossible that someone wouldn't lend privately. That's a person-to-person type scenario. But for a traditional mortgage, you have to be able to prove your ability to repay the money, and if you don't have income, we can't do that.
Awesome. Deb, I'm glad you jumped in on here. I don't know if you know the answer to this, or maybe Robbie can help us with this. I was telling Lynn, a for sale by owner is selling his house. He just lost his job. So if his house sells, he will put half the money down. So he was asking me if he can still qualify for a mortgage because he has half down. So on that note, if let's say we sold the house and he can't get a mortgage, how can he get a rental not having a job and being on unemployment? Maybe Robbie can answer that
right now.
Not today, but maybe he can help me.
Yeah, I mean, they can look at bank statements. If you go into communities, not like private homes,
Yes.
things like that, where they'll just take additional security deposits, things of that nature.
Okay.
Can qualify you in other ways. The private homes don't do that. Plus, you don't have to come up with the first, last, and middle. A lot of times, and move-in fees, or sometimes they have specials, especially now, I'm sure.
So I think what I'm going to do after this Zoom call, maybe we can get together and figure out something about the people that are selling their homes and they don't have jobs and they do have to rent. Maybe we can find them places that say, as long as you have X amount of money in your account or
All the
something.
projects work differently. It depends on their approval process.
Okay, that's
Not
true.
every property works the same. Where I worked in Boca, it was very different than where Robbie worked in Davie.
Okay,
We were able to approve people.
all right.
And where I worked in Boca, it was like students and things, so they did not have full-time jobs, and these were hefty rents in Boca.
Hmm.
You know, they weren't low-end rents by any stretch.
All right, that's something I'm definitely going to work on for some people that I'm speaking to, because I think that's important to know.
If they're furloughed and things like that, I mean, there's got to be different stuff out there now.
I would hope so.
But he's got to live somewhere. We all need a roof over our head.
Exactly. Okay.
Well, I think, I think that when you lower risk, in any type of situation, when you lower the risk, you have the ability to, maybe compensate another way. But I would imagine in the renting community, there's risks associated in the same capacity with a mortgage. A landlord is wondering, how are you going to make the payment?
Yeah.
So it maybe with that assets or something, again, in a landlord situation, maybe not in a community, a rental community, but there may be a way to make the landlord a little more comfortable. It's unbelievable.
Example, when Robbie and I moved here 8 years ago, we did not have jobs.
Mm-hmm.
Okay. I pay a very decent rent here.
Okay.
So we literally came from another state without being employed, not either one of us. And so.
Okay, so this might be doable.
So that's what I'm saying. It's different than what we're used to renting from private owners.
Mm-hmm.
There's no ways here that we don't have that stuff here in these communities. We gotta call the property, see who works with realtors, and then find out their criteria and what their expectations are. But I literally, both of us, there was not one person here that was employed. We didn't even have a job on the line when we moved here. Okay. So I am living proof that it happens.
All right, this is good to know. Thank you, Deb. I appreciate you guys being on this call for me, because I just want to make sure that I'm giving people the information that, again, I think that I know. It's just a different time now, and I am a little bit more sensitive. So I'm trying to make sure that I tell people kind of what I maybe think it is. But thank you for helping me on that. The other one, I was talking to some people that I'm working with, and they asked me if the FHA and conventional rules have changed, Lynn, on anything because of what's happening now. These are people that haven't lost their jobs, although I do have somebody that did lose their job. So based on I'm going to base it on the conversation that you had when you lose a job, even though it's not under, oh God, how do you say that? If somebody, I can think the word furlough comes to my mind for some reason. Is furlough different than being let go?
Yeah, that's more along the lines of, my understanding is, and Deb, maybe you can chime in too. My understanding is that means that you're temporarily let go. Yeah. until, because if the company's closed, they can't pay. My understanding is it means that they're hoping that they can get you back to work. But, the company, while being shut down, doesn't have the ability to pay. In some cases, people are taking, a friend of mine that works at the casino is getting a short-term pay and then has to start using vacation time to continue getting paid.
Yeah.
So, but they're still employed. That's a difference of being laid off, where, now you can go and collect unemployment because, you're laid off. You no longer have a job. There's I don't want to speak out of turn here. I don't know that I have the specific verbiage of exactly what that means. But that's my understanding, is that you still are employed.
Okay.
Where laid off, you no longer are employed.
Okay.
Deb, do you agree with that?
I think so. I think that's what it means.
So
It's
the
like
furlough,
position, there's nothing they can do. They want you back. It's just, they're closed.
Right.
so
I'm actually
then,
looking it up real quick to see if I can find an exact definition, but go ahead, I'm listening.
so the furlough would basically be almost the same thing as far as them if they were in the process of buying a home. Even though they still have the job, they're on furlough, it would still come into effect, I'm assuming, to be qualified for the mortgage.
Yeah, so the definition is temporary leave of employees due to special needs of a company or employer, temporary leave, economic conditions. So that's the specific definition. So they are still employed, it's a temporary leave.
All right. And per what you are hearing out there, the FHA and the conventional, have there been any changes due to what's going on now?
So where does the money come from? And then there's the lender that lends the money to replace, that they'll get their money back once they lend the money out. The issue is happening on the bank level. We haven't seen any specific rule, or at least I haven't yet, that FHA came out and said, we're not insuring loans anymore, because FHA is insurance. We're not insuring loans anymore with a 620 credit score. That's not what I've heard FHA say. However, on the banking level, because remember, banks are responsible for what they originate. That's when they're trying to originate loans and the scores are lower, lower scores might have a higher risk of having default rates, and they don't want to take a chance on loans right now because the risk for a bank is very high. They may not be able to sell the servicing rights. Servicing companies have big concerns right now that they won't be able to get payments in at a high percentage of the loans that they're servicing, so they're concerned. So the banks are making changes to eliminate some risk. What I'm hearing a lot of is that lenders may allow you to go a little lower. Like, for example, Supreme still allows you to finance on FHA on a lower score down to the 620 range, but they're having pricing adjustments. And we've been instructed, we may need to get seller concessions on some low credit score borrowers right now to try to pay for these pricing adjustments, because how we're compensating for the high risk because of the lower score is through a pricing adjustment, so that the lenders can stay profitable in a situation where a payment may not be paid. So the circumstance is not coming from the hierarchy down, it's coming from the lender to the consumer, because they're trying to preserve risk.
Okay, okay, cool, thank you. Oh God, thank you so much. This is gonna help me, because I'm talking to so many people, it's gonna help me so much.
Oh, my pleasure.
Okay, the other thing is, two people, actually one person that I know also contacted their bank, but they couldn't get anybody on the phone. But make a long story short, the bank is letting them not pay the mortgage until July 1st. Mm-hmm. And because they can't get somebody on the phone, they're asking me if this will mess up their credit.
So that's a big conversation right now. This is a conversation that we're having with a lot of people. What are the options? And I think, as I've spoken to a lot of my colleagues and the information that we're reading, you're hearing the words forbearance, you're hearing deferred. these words are, these programs and these words are being thrown around a lot, but it's very important to know what they mean, because just because they're saying not to make the payment, if you have gotten an approved forbearance where you do not have to make a payment for 3 months, that doesn't mean the payment disappeared. It just means that it's being in forbearance, where kind of like we're a student loan, where, okay, now you've made a payment arrangement. It doesn't mean that the interest is gone. And it's specifically where you're dealing with a mortgage, a big portion, or a portion, not a big, but portion of your mortgage payment are taxes and insurance.
Yes.
So the tax bill's coming on November 1st. The insurance bill's coming whenever the insurance bill is due. So if you're deferring or forbearing payments and you're not making a payment, the portion of that payment that goes into escrow is now also going to be negative. So when you don't make a payment, the payment is still there. The need for the payment is still there. And understanding what happens when the payment becomes due again is really important to prepare financially, so that you're not just pushing out a financial problem. Sometimes you have to. Sometimes it's, okay, I've got to, in some situations, okay, I have to put food on the table, I have to feed my family, or I have to make a payment. All right, well, we gotta weigh out our options here. Of course, that a situation like that, we've got to look at these forbearance options. But if you have the ability to make your payment, make the payment, because you're then not prolonging another financial issue where it could be problematic. You know, if you can't make the payment and the bank is allowing you to not make the payment, they should not be reporting it to the credit bureau. That's a forgiven period of time where they're saying, okay, we are working with you so you do not have to make the payment. Again, though, that doesn't mean the payment's gone. And understanding what happens once the payment is again due is incredibly important to prepare financially, because 3 months is going to be here, you know, it passes in seconds, it seems, right? Although March seemed very long. These months will pass so fast. And April's going to seem long too. But it's going to come quicker than you expect. And then all of a sudden now what you've done is just pushed out another financial issue. We don't want that. We don't want people to get into a situation where they feel the relief now and then have a problem later. If you need the relief, take the relief. But by taking the relief, you need to also understand, what does that mean in 3 months from now? Do I owe 3 payments in 3 months from now? Or do I have an option to pay those payments back over time, over a period of time? You know, what are my options, so that you can prepare and not be hit with a surprise in 3 months that's just going to cause you another financial hardship?
So I think my goal would probably be to tell them to really try to get in touch with the bank. And I know that it's hard now as far as getting somebody on the phone. Maybe there's a support ticket or something that they could say, please explain to me what this means if I do this. And really work on that, since they're asking me that question. I just feel like they're going to have to work on it more. Because
you need to understand it.
It's different too.
What's that? I'm sorry?
Every bank is different, probably.
They have different rules, yes. And then is there deferred? Is it forbeared? What is going on? What is actually happening? And when will I have to pay it back? Or it's very important to know that. And if you do have the option for a payment forbearance, do your very best to put aside taxes and insurance, because your escrow will go negative. And that's a whole nother issue that we need to deal with, because we don't want your escrows to be negative. Because now if your escrow goes negative, when the payment's due for the taxes and the bank goes to pay the payment, they're going to have a shortage, which then in November, or well, probably by the time the shortage is reconciled, it's January. And then you get the letter in the mail saying, okay, well, your escrow's short, $1,000, you got to pay us $1,000, or your payment's going to go up 2 times the deferred amount, the negative balance. That happens when a lot of people, that's a common situation where people buy a primary residence that was already homesteaded. Now the property could have been homesteaded for 15 years, so the taxes could be super low, and then all of a sudden the January the following year comes and the tax has gone up. We do our very best to prepare buyers for that. I know you guys do too, that the taxes may change, and when they do change, you need to be prepared for that, because your escrow, you've been escrowing for the previous owner's taxes. So now that the taxes are changed, if you didn't prepare for that that shortage, the bank's going to say, okay, now you owe me this sum of money, or your payment's going to go up double the amount of the shortage, which that can add a tremendous amount of financial stress to a family. And it can be avoided if you're prepared financially. In the same situation with the forbearance, if you're not making the payment, try to put the money aside, or know that you have the money in your savings, because the tax bill and the insurance bill is going to come.
Okay, thank you. Oh God, thank you so much for that. Because that's really going to help me speak to them intelligently.
Of course.
Because this is something totally different than what we're used to. As far as refinancing, are you guys still refinancing homes?
Oh yeah, yeah, definitely. We do have a lot of refinances coming in. We've never been a lender that has advertised for refinance. We specialize in the purchase-based world, the purchase-based business. Our job is to make sure that you have the ability to have a place to put your purchases. So we don't focus on advertising it, but we are just as good at it as anybody else. I mean, we do the same thing. And we are closing them a lot quicker than most of the other lenders, just because it's not something that we are out there advertising to try to get. What we're doing is that we are refinancing our client base. We have people that know us that come to us for refinances, and of course we're going to service them, we're going to do the job for them, and we're going to get them done in a reasonable amount of time. We're still closing refinances in 30 days, and we're still closing purchases in 8. So yes, we can help, but we're trying to be very strategic about it, because once you fill up your pipeline and you fill up your lending capacity with refinances, then we can't do our job and get our purchase business in there as well. So we're very careful about it. We're strategically working through that.
Okay, so the refinancing, we're still good to go. Same thing applies for the refinancing as far as the person being employed or not being employed.
Same thing. We still have to approve your ability to pay a mortgage.
Okay.
We have actually people that are refinancing right now. One of them, ironically, it's worked out really well, where we've had several people refinance just because the rates have been a little lower. Yeah. And now when you refinance, we're closing a lot of people the beginning of the month, so at the beginning of April or the beginning of May. The beauty of that is, and this is really an ironic situation in this current situation, is that when you close in the beginning, we're rolling all the costs into the refinance. So for example, if you had a payment due April 1st, well, you have until the 15th to make the payment with no penalty. So in the situation where all the buyers that we're closing this week on refinances, they don't have to make April's payment, and they don't have to make May's payment, because the first payment isn't due until June. So ironically, we're getting like this little glimpse of time where people that are refinancing are saving 2 months to try to get through this situation if their income has changed. Because even if the income has changed a little bit, but they're still employed, we're able to get the refinance done. It's just you have to have employment, though. That's the thing. There's a difference between the two. But there's a great ironic blessing right now that we have determined and we have found, because people are getting a little bit of a break that are refinancing.
Well, on a good note, there's still business out there. And yes. And I just want to refresh my memory on something. I was speaking to somebody in Colorado that is going to sell their home and come down here. Mm-hmm. So he is going to leave his job, but he does have a new job here. And I told him, as long as it's in the same field that he was in, what he was doing in Colorado, we will be okay, correct? Mm-hmm.
Yeah. So it's not just field, though, it's income type as well. Okay. So if you're having, let's say, for example, someone was in sales in Colorado, and now they're moving to Florida and they're getting a sales position, and that sales position pays the majority of that income in commission. Well, that we can't say just because it was the same industry, we can go and get a new loan with that employment, because the commission portion of the income hasn't happened for us to average it out. So unless an employer has a letter that says, okay, we guarantee that, here's your base pay of $50,000, and we guarantee you to make another 50 in bonuses and up to 150 guaranteed another 50 possibly with, on revenue. Well, we can use the the salary and the guaranteed 50, but the other 50 that will happen based upon revenue, we can't use it. So if they were making 150,000 in Colorado and they're moving here with that type of letter, we can only use 100. So it's not to say we can use all the income. It has to do. Sorry about that, guys.
That's
Someone
okay.
was
calling. That's okay.
That's my phone when I have to put it on airplane mode. But so when the money, when the person comes here, we have to not only verify the type of income, but also the field as well. So everything has to line.
Okay. And the people, some of the people that I'm working with now, they're telling me that they want to wait 30 to 45 days because they feel like the market's going to go down. I'm thinking that the interest rates are going up. What are your thoughts on that?
Our boss, our leader here, Pat Flood, put out a great Facebook Live video a few days ago. And, you know, it's very hard to say exactly what will happen, but I do anticipate that there will probably be a little bit of a drop in rate, just because if you were to look at the 10-year treasury right now, which really is the determining factor on how mortgage rates are determined, we would have a lower rate right now because of how low the 10-year is. But because we have all these other factors that are causing the rate to go up right now or be a little higher, these factors are kind of inflating the rate because servicing concerns, liquidity in the mortgage industry. So these other things are kind of pushing the rate up a little bit, and that's causing, you know, a little bit of inflation. The rates are still super low. I mean, we left 3.1 on a 15-year yesterday, and 3.6 on a 30-year, so they're still super low. Could they go down a little bit? They could. If we were to look at the true indication of a rate, where the rates are determined right now, we would assume the rate might be even lower than where it is right now. So as these other factors come into play and maybe solve themselves over time, then the rate might come down a little bit. But then who knows, at that point something could happen where the virus gets contained and the 10-year goes up a little bit, which would compensate it. So is it possible, Lisa? Yes, it's possible the rates could go down. Is it possible they can go up? Yes, they can. That's why I've been always saying, my motto, and I've told it a few times now, I don't mean to sound like a broken record, but if you like it, lock it. Because if the rate makes sense for you today, we don't know what the rate will be in 30 days from now. Nobody has that crystal ball. Is it projected maybe to go down? Possibly. But if the rate makes sense today, lock it. Because we can't guarantee that you'll ever see it again. That's how volatile the market is. Don't try to play the rate game, play the payment game. If something makes sense and a rate and mortgage makes sense and is making financial gain for you through a refinance or through a purchase, and the payment makes sense, take it, because we can't say it'll last forever.
Oh, Lynn, thank you so much. I so appreciate you. It's really going to help me call back these people that I've been wanting to actually call back. Mm-hmm. It's just because they're in a little bit of a different situation in their life right now, and I'm staying positive. And I just want to make sure that I'm saying things correctly. And I appreciate you so much. You have no idea.
Oh, it's my pleasure.
I love the like it, lock it.
Yeah.
I really like that a lot. I really do.
Someone taught me that. I've been in the industry almost about 19 years now. And someone taught me that 15 years ago. And it has been a saving grace, because when you try to play the rate game, a lot of the time you can lose. And then you lose what would have made more sense. So if something makes sense, lock it.
Awesome. Hey, Deb, do you have any questions for Lynn, or are we good to go? This is great information. This is going to help me so much. I appreciate you so much. My little Staten Island little girl, my friend.
Our poor Staten Island is seeing quite the brunt of all of this right now.
I know. I'm keeping in touch with everybody there. There's been some stories, and but we are going to stay positive. There's still business out there. We will take care of the people that are hurting. I will answer their questions and make them feel better as far as what to do or what not to do. And I do appreciate that you did this for me today. I really do.
Oh, it's my pleasure. Anytime, anytime. That's what I'm here for. And, you know, I'm grateful that we have people that like Pat and Bob and our managers that are constantly pouring into us, giving us information that we need to be able to take out to provide information that can help you. I mean, that's our job. That's what we're here for. So please, anytime, I'm always here.
Okay, you guys rock.
Bob are the best.
Yes, they are.
Bob was on
Love you back.
on the TV. I love him.
Oh yeah, he's
the team meeting. I think he was at our team meeting, Bob.
yeah. They
I
are.
got to see Pat Flood in like maybe there was only like 10 of us in the room.
Oh yeah.
Oh, I know. It was before your
Continuing education class. Yes.
So there's the sweetest people. It's weird that we met you. Like, I don't know, like how the Waxman group is and how they are. It's just weird.
Yeah.
We have another one of us. It's weird.
It's exactly. And that's how we
Yeah.
feel being in the office. It's like we're home. You know, being at Keller Williams, it's like we're home with you guys. Really.
It is. You got to meet this Pat Flood, Lisa. Is just,
I want to.
And they're brothers. They're brothers. I know, but
Yeah.
he's real. Like he's adult. He's very adorable. I love Bob though.
Thank you, Deb.
All right, guys, listen, have a good day. I miss you guys, but at least we get to see each other. And thank you for the information, Lynn. I really appreciate you.
Yeah.
Anytime.
Have
Anytime.
a good day, guys. You
I'm a Zoom away.
Zoom away, my friend. All right.
Zoom. We'll do this again Monday.
Okay.
I'm sick of it.
Bye,
Bye, guys.